Hello, everybody. Welcome to Wealth Window. Today, we're diving into a topic that's often shrouded in mystery and misconceptions: taxes. If you've ever wondered how some individuals and businesses manage to pay significantly less in taxes than you might expect, you're in the right place. In this video, we'll explore what tax loopholes are, how they work, and most importantly, how you can take advantage of them legally to save money on your taxes. We'll start by breaking down the concept of tax loopholes, clarifying that these are not shady practices, but rather legal provisions in the tax code that allow for certain deductions, credits, and exemptions. You'll learn about various strategies that can help you minimize your tax liability without stepping outside the law. But that's not all. We'll also share practical tips on how to implement these strategies effectively. Whether you're a seasoned taxpayer or just starting to navigate your financial responsibilities, our goal is to equip you with the knowledge you need to make informed decisions. So if you're ready to unlock the secrets of legal tax savings and discover how to keep more of your hard-earned money in your pocket, stick around. By the end of this video, you'll have a clearer understanding of tax loopholes and actionable steps to take advantage of them. Let's get started on this journey to smarter tax planning. Understanding tax loopholes. Tax loopholes are provisions in the tax code that allow individuals and businesses to reduce their taxable income through legal means. These loopholes can take the form of deductions, credits, or exemptions that are intentionally built into the tax system. It's important to note that tax loopholes are entirely legal. They exist as a result of the complexities and intricacies of tax legislation. By understanding these loopholes, taxpayers can strategically plan their finances to minimize their tax burden. Now, it's crucial to differentiate between tax loopholes and tax evasion. While tax loopholes are legal strategies to reduce taxes, tax evasion involves illegal practices to avoid paying taxes owed. Tax evasion can lead to severe penalties, including fines and imprisonment. Understanding this distinction is vital for anyone looking to navigate the tax landscape responsibly and ethically. Recognizing and utilizing tax loopholes can significantly impact your financial planning. By taking advantage of these legal provisions, you can optimize your tax situation, allowing you to allocate more resources towards savings, investments, or other financial goals. For instance, knowing how to leverage deductions for mortgage interest or contributions to retirement accounts can lead to substantial savings over time. Common legal tax loopholes. When it comes to legally reducing your tax burden, several common tax loopholes can provide significant benefits to both individuals and businesses. Let's explore a few of these loopholes and how they can work in your favor. One of the most well-known tax loopholes is the mortgage interest deduction. Homeowners can deduct the interest paid on their mortgage from their taxable income, which can lead to substantial savings. For example, if you have a mortgage of $300,000 with an interest rate of 4%, you could pay around $12,000 in interest during the first year. By deducting this amount, you effectively lower your taxable income, which can save you hundreds or even thousands of dollars in taxes. Another valuable loophole is contributions to retirement accounts, such as a 401k or an IRA. Contributions to these accounts are often tax deductible, meaning you can reduce your taxable income while saving for the future. For instance, if you contribute $6,000 to an IRA, that amount is deducted from your taxable income, potentially saving you around $1,500 in taxes, depending on your tax bracket. According to the IRS, millions of taxpayers take advantage of these retirement account contributions each year, highlighting their effectiveness in tax planning. Additionally, business owners can benefit from the Section 179 deduction, which allows them to deduct the full purchase price of qualifying equipment and software purchased or financed during the tax year. This can lead to significant tax savings, as businesses can write off large expenses immediately rather than depreciating them over time. In 2021, businesses claimed over $25 billion in Section 179 deductions, showcasing its popularity and effectiveness. By understanding and utilizing these common legal tax loopholes, taxpayers can strategically reduce their tax liabilities and enhance their financial well-being. So how do we implement tax loopholes? Implementing legal tax loopholes effectively requires a strategic approach. Here are some steps to help you utilize deductions and credits to your advantage. First, familiarize yourself with the specific deductions and credits available to you. Start by reviewing the IRS guidelines or resources that outline eligible expenses. For individuals, this might include deductions for mortgage interest, student loan interest, or contributions to retirement accounts. For businesses, consider deductions for operational expenses, equipment purchases, and employee benefits. Make a list of the loopholes that apply to your situation and prioritize them based on potential savings. Next, it's crucial to keep accurate records of all relevant financial documents. This includes receipts, invoices, and bank statements that support your claims for deductions and credits. Maintaining organized records not only simplifies the tax filing process, but also ensures you have the necessary documentation in case of an audit. Consider using accounting software or apps to track your expenses throughout the year, making it easier to compile information when tax season arrives. Another important step is to plan your finances strategically. For example, if you know you can deduct certain expenses, consider timing your purchases or contributions to maximize your tax benefits. This might involve making larger contributions to retirement accounts or prepaying certain expenses before the end of the tax year. Finally, while it's possible to navigate tax loopholes on your own, consulting with a tax professional can provide personalized advice tailored to your unique financial situation. A tax advisor can help you identify additional opportunities for savings, ensure compliance with tax laws, and guide you through complex regulations. By following these steps and seeking expert guidance, you can effectively implement legal tax loopholes and optimize your tax savings. Risks and considerations. While utilizing legal tax loopholes can lead to significant savings, it's essential to approach them with caution and awareness of potential risks. One of the most critical considerations is the importance of staying within legal boundaries. Tax laws can be complex, and misinterpreting them can lead to unintended consequences. Engaging in aggressive tax strategies that push the limits of legality can result in severe penalties, including fines and interest on unpaid taxes. Therefore, it's crucial to ensure that any loophole you choose to exploit is well within the confines of the law. Another significant risk is the potential for audits and increased scrutiny from tax authorities. The IRS and other tax agencies are vigilant about identifying discrepancies and unusual patterns in tax filings. If you claim deductions or credits that appear excessive or inconsistent with your income level, you may attract attention and face an audit. This process can be time-consuming, stressful, and costly, even if you ultimately prove your claims are valid. Being aware of this risk can help you make more informed decisions about which loopholes to utilize. Moreover, it's vital to stay informed about changes in tax laws and regulations. Tax codes can evolve, and what may have been a beneficial loophole one year could be eliminated or modified the next. Regularly reviewing your tax strategies and staying updated on legislative changes can help you adapt and avoid pitfalls. As we wrap up our discussion on legal tax loopholes, let's recap the key takeaways. We've explored what tax loopholes are and how they function within the tax system, emphasizing that these are legal provisions designed to help individuals and businesses reduce their tax liabilities. We highlighted several common loopholes, such as mortgage interest deductions and retirement account contributions, demonstrating how they can lead to significant savings. Additionally, we discussed practical steps for implementing these loopholes effectively, including the importance of maintaining accurate records and consulting with a tax professional for personalized advice. If you found this information helpful, we encourage you to subscribe to our channel for more insightful content on business and personal finance. Don't forget to like this video and share it with friends or family who might also benefit from understanding legal tax loopholes. Additionally, feel free to explore related content on our channel, where you'll find a wealth of resources designed to empower you in your financial journey. Whether you're looking for tips on budgeting, investing, or navigating tax laws, we've got you covered. Thank you for joining us today, and we look forward to seeing you in our next video.